Let me see. First, can you all see my screen? Can somebody confirm whether you all can see my
Yes,
screen?
sir. Yeah, we
Okay.
can see the screen.
Okay. Let me start. So basically, today my plan is to complete this going concern ISA 570 revise, and then to do the balance part of ISA 220. So the next lecture, so after the lecture, we will agree on the date. So I will be covering 540, which is the accounting standard revise one, and then the 550 related party disclosure standards. So that's basically my plan. With that, I will be completing the standard allocated to me. So let me start with ISA 570 revised going concern. Right, you all can hear me properly, right?
Yes, sir.
Okay, right, good. So first, so this ISA deals with the auditor's responsibilities in the audit of financial statement relating to going concern and the implication for the auditor's report. ISA 701, I hope you all have already done the auditor reporting standards 700, 701, 705, 706. Can somebody confirm whether you all have already covered the auditor reporting standard as part of this course? I cannot see the chat message. If somebody can unmute and confirm whether you all have covered, probably you would have covered the auditor reporting standard as part of this course. Can somebody confirm that? Because we are referring to the auditor reporting standard when we discuss the implication for the auditor's report in respect of reporting ongoing concern. Can somebody confirm that to me whether you all have covered? Do we have? Can somebody? Ah, yes, some the chat message. No. Ah, yes. Okay. So I cannot see when I'm presenting actually the chat message. That's why I asked. Okay, that's okay. So, as part of the auditor reporting revisions to auditor reporting standard, a new standard was introduced, that is 701, communicating key audit matters in the independent auditor's report, which deals with the auditor's responsibility to communicate key audit matters in the auditor's report. So, as per this particular standard, there is a process to be followed in determining which key matters to be reported as key audit matters, which matters to be reported as key audit matters, and uh, key audit matters are reported to be reported in the independent auditors reports related to listed entities. That is the requirement. ISA 701 act of the how this standard get linked to ISA 570, the going concern standard. ISA 701 acknowledge that when ISA 701 applies, now you apply ISA 701 for listed entities. Why? Key audit matters are to be reported in the independent auditor's report related to listed entities, right? When ISA 701 applies, matters relating to going concern may be determined to be key audit matters and explain that material uncertainty related to events or conditions. So these concepts we will discuss as we go along. One is material uncertainty. What is material uncertainty? Then events or conditions that may cause significant doubt on the entity's ability to continue as a going concern. So two concepts here: material uncertainty relate to events or conditions. Now, there are three types of events or condition: financial, operating, and other. as listed in the standard ISA 570. That may cause significant doubt on the entity's ability to continue as a going concern. One of the fundamental accounting principles is going concern. When you prepare the financial statement, we assume that entity is a going concern. General purpose financial statements, we assume that the entity is a going concern. But this may not be the case in certain situations. So as we go on, we will discuss. By its nature, key audit matter, right? Now, as I explained earlier, there were revisions to the auditor reporting standard. As a result, ISA 700, and then, as I explained earlier, a brand new standard was introduced, key audit matters. Reporting key audit matters in the independent auditor's report and required for the uh, listed companies audit report. Then 705 also revised, which is modification to the auditor's opinion. I hope you would have discussed. Now 700 is unmodified opinion, unmodified, unqualified, or we call it clean report, which means financial statements are prepared in all material respect in accordance with the applicable financial reporting framework. Or in other words, financial statement provide true and fair view of state of affairs at the balance sheet date and results of its operations. That is called an unmodified opinion. The best opinion a client would get from the auditors. Unmodified opinion, unqualified. Then there are circumstances the auditor would deviate from an unmodified opinion or an unqualified opinion and issue a modified opinion. Modified opinion. There are four types of modified opinion. Under two circumstances, we issue modified opinion. I will just highlight that. The first one is financial statements are materially misstated. Financial statements are materially misstated. That is the first circumstances. The auditor issue a modified opinion filed based on the audit evidence obtained, which are considered to be sufficient and appropriate. Auditor concludes that auditor concludes that financial statements are materially misstated, which we call departure from applicable financial reporting framework. What is the first circumstance? Based on the sufficient appropriate audit evidence obtained, auditor concludes that auditor concludes that financial statements as a whole are not free from material misstatement. In other words, financial statements are materially misstated. Financial statements are materially misstated, which we call departure from the applicable financial reporting framework. You know the purpose of a financial reporting framework. It serves four purposes: recognition, measurement, presentation, and disclosure. So there is a departure from the applicable financial reporting framework. What is the applicable financial reporting framework? It could be Sri Lanka Accounting Standard, International Accounting Standard, SLFRS for SME version, or likewise. What is the first circumstance? Based on the sufficient appropriate audit evidence obtained, auditor concludes that financial statement as a whole are not free from material misstatement, or in other words, financial statements are materially misstated. Now, second one. What is the second one? Auditor has been unable to perform required audit procedures Auditor has been unable to perform required audit procedures, but conclude that financial statement may have been materially misstated. What is the first category we said? Auditor has obtained sufficient appropriate audit evidence, and based on those sufficient appropriate audit evidences, auditor concludes that financial statements are materially misstated. He is sure, he concludes that. But what is the second one? Auditor has been unable to perform the required audit procedures. So when you are unable to perform the audit procedures, what you are not getting? Sufficient appropriate audit evidence. But auditor conclude that financial statement may have been materially misstated. This we call limitation of scope or scope limitation. So the circumstances under which auditor would issue a modified opinion. What are the two circumstances? First one is departure from the applicable financial reporting framework. Departure from the applicable financial reporting framework. Second one is limitation of scope. So that's the first stage. Then after that, I'm not going to go into detail. You would have already covered this. The auditor consider whether the impact is material but not pervasive, or the impact is, or possible impact is material and pervasive. That is the second stage. First stage, whether there is a departure from the applicable financial reporting framework or limitation of scope, and then auditor go to the next level and consider whether the impact or possible impact is when there is a departure from the applicable financial reporting framework. Possible impact in respect of limitation of scope, because possible, why we use the word possible? Because auditor is not aware of, because he has been unable to perform audit procedures to obtain sufficient appropriate audit evidence. So auditor consider at this stage two things: whether the impact or possible impact material but not pervasive. Other one is material and pervasive. If the possible impact for departure from the applicable financial reporting framework, if auditor concludes impact is material but not pervasive, we issue a qualified opinion. So why actually I am highlighting this? In this standard, we have to discuss the implication to the auditor reporting. And these terms we discuss, you have to have some idea the type of opinion we are issuing in different circumstances when it comes to auditor conclusion with regard to going concern. That's why, not that I am trying to do this particular standard, right? Just to refresh your knowledge. So, under departure from applicable financial reporting framework, number one, if auditor concludes that effect is material but not pervasive, auditor issue a qualified opinion. What is the number one? In respect of departure from applicable financial reporting framework, if auditor concludes that impact is material but not pervasive, qualified opinion. If auditor conclude that impact is both material and pervasive, then auditor issue an adverse opinion. Adverse opinion. That is the first, under first circumstance, the two modified opinion we issue. Now what is the next one? Limitation of scope, otherwise scope limitation. If auditor consider possible effect, Why I use possible effect or possible impact? Auditor is not certain why he has been unable to perform the required audit procedures in order to obtain sufficient appropriate audit evidence, but he concludes that financial statement may have been materially misstated. In that situation, if auditor concludes financial statements, the possible impact of scope limitation is material but not pervasive, the possible effect of limitation scope on the financial statement could be material but not pervasive, then auditor issue a qualified opinion. That is the third one. The possible effect could be material but not pervasive, a qualified opinion. If auditor concludes that possible effect could be both possible effect could be both material and pervasive, auditor disclaim the opinion. Disclaimer of opinion mean auditor is not issuing an opinion. Auditor is not issuing an opinion. So these are the four types of qualified opinion an auditor would issue under two circumstances. What are the two circumstances? Departure from the applicable financial reporting framework. That means financial statements are materially misstated. What is the other one? Is scope limitation. Scope limitation. Financial statement may have been materially misstated. In that, again, we issue two modified opinion. Under first category, we issue a qualified opinion if it is material but not pervasive. If it is both material and pervasive, an adverse opinion in respect of limitation of scope, if the possible effect material could be material but not pervasive, then again a qualified opinion that we call except for opinion. Except for opinion, that means except for that, rest is okay. If possible effect is both material and pervasive, auditor issue a disclaimer of opinion, which means auditor is not issuing an opinion. Auditor is not an issue. Auditor is not issuing an opinion. So are you all clear what I explained at high level to just to refresh your knowledge on the auditor reporting standard? Can somebody confirm that? Because as we go along, when it comes to auditor reporting conclusion, in respect of going concern, we will use these qualified opinion, disclaimer of opinion. So, like these words, we will use. I mean, you have to have some understanding to relate what is a qualified opinion, under what circumstance we issue a qualified opinion, under what circumstance we issue an adverse opinion, under what circumstances the auditor disclaim the opinion. So are you all clear? Can somebody just confirm to me that? If you can, somebody just send me a chat message. This is very important. That's why I took other standard. I will not discuss what is listed out in the standard. If you all are clear, I'm sure you would have covered in greater detail the auditor reporting standard. This is just to keep you, posted on the at high level the type of modified opinion. Right. Excellent. So let me go to this. So as part of revisions to the auditor reporting standard, ISA 570, which is the going concern standard, was also subject to revision. So today that standard we will go through. ISA 720 talks about other information. Other information mean any information that would be included in a document basically which contain the financial statement. If you take an annual report, Other than the financial statement, everything else is other information. Now, in annual report, what you have: chairman's review, corporate governance, ESG disclosures, director's report, 5-year summary, management commentary, all that you would have. So those are 720. Then revision to ISA 260. As part of these, revisions to auditor reporting standard, ISA 260, which is communication with those charged with governance. Now, who are those charged with governance in Sri Lankan context? Board of Directors or the Board Audit Committee, which is a subcommittee of the Board of Directors. Now, there are subcommittees under Board of Directors: Audit Committee, Related Party Transaction Review Committee, Nomination Committee, Remuneration Committee, likewise. And then as a result, and 706 is emphasis of matter paragraph or other matter paragraph. Probably would have done that also, that standard also, including an emphasis of matter paragraph or other matter paragraph in the independent auditor's report. That particular standard also revised. Now, as I explained, ISA 701 was the brand new standard which we never had in the past. So, where we have to disclose key audit matters. Key audit matters are to be disclosed in the independent auditor's report issued for listed entity. That is a mandatory requirement, right? So all these ISAs effective for audit of financial statement for period ended on or after 15 December 2016 in Sri Lankan context. These revised and new standard was effective for audit of financial for period ending on or after 31st March 2018. So that's the basically context to this standard, the revision. What is going concern assumption? Another fundamental principles. Under the going concern assumption, an entity is viewed as continuing in business for the foreseeable future. Now, when you say foreseeable future, we consider it at least 12 months from the date of issue of the financial statement. Foreseeable future. Now, when general purpose financial statements are prepared on a going concern basis, that's the expectation. When you take John Keel's, Haley's, or Brandix, or MAS, or any other entity, when you prepare general purpose financial statements are prepared on a going concern basis. That's why you have in the balance sheet current versus non-current classification. Now, if you take current assets, mean what you expect to realize within next 12 months. Next 12 months from the balance sheet date. Thereafter, you classify, let's say, property, plant, and equipment that you expect to, the economic benefit of property, plant, and equipment you expect to realize during the useful life, which is beyond 1 year period. Then you have other non-current assets like right of use asset, investment property, non-current receivables, investment in, whatever you call it. That's why you have current versus non-current classification, current assets versus non-current assets, current liabilities versus non-current liabilities. So what is the going concern assumption? Under the going concern assumption, an entity is viewed as continuing in business for the foreseeable future. When you consider the foreseeable future, it is about 12 months from the date of the financial statement. General purpose financial statements are prepared on a going concern basis unless management either intends to liquidate the entity. Let's say they have planned due to strategic reasons, or you see that this business model is not viable. I can remember, if you take year 2022, the exchange rate went up. So Sri Lankan rupee depreciated against the US dollars significantly. And the exchange rate went to 380, 400, and in the informal market, the rate was much higher than that. So there were certain companies in Sri Lanka, they import certain, let's say certain sportwear, certain items, the electronics, they import and Then their business was to sell in the local market. So they import. So when they import, they need dollar. So because of depreciation of Sri Lankan rupees against US dollars, the import cost significantly increased. As a result, I mean, when your cost of purchase goes up, you need to adjust your selling price. That's the normal thing, no? So they were unable to compete, sell in the market. So some of the companies, the management decided to strategically, we will close down this operation. So that's why it says, unless management either intends to liquidate the entity. So they have already decided to liquidate the entity. If that is the case, you cannot use the going concern assumption. So these first few slides, I will go slowly. I mean, for you to get the concept right. O to cease operation, O has no realistic alternative but to do so. As an example, let's say there is an insurance company. For you to have an insurance company, you have to have the license from the Insurance Regulatory Commission. For you to operate as a telecommunication company, you have to have the license from Telecommunication Regulatory Commission. If that license, let's say, suspended, then you are not a going concern. So you cannot prepare the going financial statement on the basis the entity is a going concern. So I can remember sometime, about 15 years ago, there was a company called Selinco Takaful. Selinco Takaful, because they were operating as a general insurer under Sharia law. So their license was suspended. To date, it had not been issued. And so they had no other choice other than basically liquidating the company. So basically, you cannot prepare the financial statement on a going concern basis unless management either intends to liquidate the entity or to cease operation who has no realistic alternative but to do so. Now there are special purpose financial statement like for tax purposes. In that sort of a situation, you may either prepare based on going concern or not based on going concern. Special purpose financial statement may or may not be prepared in accordance with the financial reporting framework for which the going concern basis is relevant. For example, going concern basis is not relevant for some financial statement prepared on a tax basis in particular jurisdiction. If you take in India, in addition to the statutory financial statement, which are general purpose financial statement, they also have to basically prepare financial statement for tax purposes. In Sri Lanka, what happened is basically you consider the accounting profit or loss from the general purpose financial statement, and then you do additions and deletion to arrive at additions and deductions to arrive at the taxable profit or loss. And based on that, the companies entities pay taxes. So that's a process generally we follow in Sri Lanka. But certain countries, you have to prepare a statement, the statement of profit or loss for tax purpose, which may not be on a going concern basis, but the purpose is what specific purpose, special purpose financial statement for tax purposes, right? When the use of going concern assumption is appropriate, as I explained, assets and liabilities are recorded on the basis that the entity will be able to realize its asset and discharge its liabilities in the ordinary course of business. That's why you have current versus non-current classification. No sooner the going concern assumption is not appropriate. Going concern assumption is not appropriate, which means financial statements cannot be prepared on the basis the entity is a going concern. You have to prepare the financial statement not on going concern basis. We call is breakup basis or liquidation basis of accounting. Breakup basis or liquidation basis of accounting. That is when the going concern assumption is not appropriate. So when you prepare the accounts on breakup basis, you don't have current versus non-current classification. You state assets at their realizable value, not at the carrying value. at the realizable value, because you expect that the entity will not last next 12 months. That's why going concern assumption is not appropriate. So the assets are stated at realizable values, liabilities are stated as settlement values, not at the carrying amounts, and you provide for any liabilities that may arise in the event of a liquidation. In the event of a liquidation, such as, well, a VRS payment, because if you are going to close down, you have to pay VRS payment to the employees and you have to pay compensation to them. So that is basically you are deviating, moving away from the going concern assumption, which means that is not appropriate. That means you have to prepare the accounts on breakup basis. Then you don't have current versus non-current classification, and you state not at the carrying values but at the realizable values, and you make provision for any provisions that may arise in the event of a liquidation. So that's basically, we have some examples. Now when we start, we talk about certain words: material uncertainty, even so condition. So let's discuss these things. See, first one, and what is the definition? We say general purpose financial statements are prepared on a going concern basis unless management either intends to liquidate the entity or to cease operation, or it has no realistic alternative but to do so. ඒක කරනවා ඇර වෙන කරන්න දෙයක් නැතුව එනකොට. Right? Now, see the first example. An oil and gas firm operating in Sri Lanka is stopped by a Sri Lankan court from carrying out operation in Sri Lanka. As an example, insurance company in Sri Lanka, insurance regulatory commission, they have basically cancelled the license. Now, what has happened here? An oil and gas firm operating in Sri Lanka is stopped by a Sri Lankan court from carrying out operations in Sri Lanka. That means the firm is not a going concern in Sri Lanka because it has to be shut down. So the court has basically given an order. You cannot carry out operation in Sri Lanka. So that means the entity is not a going concern. So what it says is the entity has no realistic alternative but to do so. But to do so. Do so mean but to liquidate the entity or shut down the entity. That's what it says. The firm is not a going concern in Sri Lanka, which means this company cannot prepare the financial statement on going concern basis. What is the next one? A nationalized refinery is in cash flow problems. Now they have cash flow problems. Now if you see Sri Lankan Airlines, there are cash flow problems. There are many companies in Sri Lanka, they are not earning profit, but they have cash flow problem, working capital problems. We'll see. A nationalized refinery is in cash flow problems, but the government of the country provided the guarantee to the refiner to help it out with all payments. But it says now, so if you relate this to Sri Lankan Airlines, that is making persistent losses. They have net current liability position, negative net worth, serious loss of capital situation. Their revenue has come down. So which means there are events now, and we are going to discuss certain concept, which means there are events or condition in Sri Lankan Airlines that make a significant doubt whether Sri Lankan Airlines would continue as a going concern. Events or conditions, keep that in mind. There are three types of events or conditions: financial, operating, and other. Now, financial. Now, if you take Sri Lanka, Sri Lankan Airlines, they have persistent losses, net current assets liability position, negative net worth. I will show you the accounts. So, just I will show you the accounts. You will see. Now, this is basically Sri Lankan Airlines accounts. Now, see the balance sheet. Can you all see the balance sheet of Sri Lankan Airlines? Can you all see my screen? Can somebody just say yes or no? I won't see the chat messages. Can you all see? Can somebody tell me? Can you all see
Yes, sir.
this? Yes. Now, if you see, so Sri Lankan Airlines is making losses. I will show. Oh, sorry. See, this is the balance sheet. Let's go to the final. See, it has a loss. See, loss for the year 71 billion. Loss for the year 71 billion. Then they have negative net worth. Now you see stated capital, reserves, and then accumulated losses 601 billion. Total net liability position is 494 million. Their current assets value is 73 billion. Their current liabilities value is 494 2 billion. Now you see there are event show conditions we discuss. There are three types of event show conditions as per the standard financial operating and other. Now, if you take Sri Lankan Airlines, they have persistent losses, negative net worth, net current liability position, and there is a serious loss of capital situation. Now, what do you mean by serious loss of capital situation? As per the Sri Lanka Companies Act number 7 of 2007, an entity is having a serious of loss of capital situation when when an entity's net assets is less than entity's net assets is less than half of its stated capital. Entity net assets are less than half of its stated capital. As an example, if the stated capital is 100, if your net assets are 40, what is half of stated capital? 50. So your net assets are less than half of the stated capital. Stated capital value is 100 million, net assets value is 40 million, but half of stated capital is 100 divided by 2 is 50. So which means there is a net assets, a serious loss of capital situation. Now if you see Sri Lankan Airlines, they have a negative net worth. They don't have actually net assets actually, right? So you will see that a nationalized refiner. Now, in respect of Sri Lankan Airlines, they prepare financial statement still ongoing concern basis. Why? Government has given guarantees to two state bank, that is BOC and People's Bank, and they have also given a letter. The ministers of cabinet, they have issued a letter as a, basically the Ministry of Finance as approved by the ministers of cabinet, that they will support Sri Lankan Airlines to continue its operation for a foreseeable future, which means 12 months from the date of the financial statement, to continue its operations. That means, despite having these events or conditions, still Sri Lankan Airlines prepare financial statement on a going concern basis. That may be the reason, the situation when it comes to CEB or Ceylon Petroleum. So just because of events or conditions are there, we will discuss examples. So we discuss some concept. We need go as we go on. We will go into detail. Material uncertainty, events or condition. Now here under this, a nationalized refinery is in cash flow problems. But the government of the country provided the guarantee to the refinery to help it out with all payments. Okay, I am making losses. I have cash flow issues, but the government is funding me. So I continue to prepare the financial statement on going concern basis. Same has been applied by Sri Lankan Airlines or any other make. Now there are multinational companies in Sri Lanka. Now those are considered as contract manufacturers for the parent companies. Generally, they don't record profits in Sri Lanka. So what happen is, always when it comes to audit, if the entity is not making profits and they are on its current liability position, like this, the parent company issue a letter of financial support. Letter of financial support. Don't worry, we will fund this entity for next 12 months, and we will provide whatever the funding required, and we will and they can continue next 12 months. So Under this, the refinery is a going concern despite poor financial position, and they can prepare the financial statement on going concern basis because there are mitigating factors. So there are even so conditions that cause significant doubt about the entity's ability to continue as a going concern. But based on the mitigating factors, what is the mitigating factor here? Government is giving a guarantee. The still the use of going concern assumption is appropriate. A bank is in serious financial troubles and the government is not willing to bail it out. Now, here what is happening? The bank has issues, financial troubles, but the government says, no, we cannot support you. So, what has happened as a result? The board of directors has passed a resolution to liquidate the business. The bank is not a going concern. Why? Well, let's go back to this. Management either intends to liquidate the entity or cease operation or has no realistic alternative but to do so. So, what they have, the government says, no, we are not going to fund you. So the board of directors has passed a resolution for voluntary liquidation. So the bank is not a going concern. So the bank cannot prepare the finances statement on the basis the bank is a going concern, right? Number four, a merchandising company has a current ratio below zero point 0.5. Now, what do you mean by below zero point 0.5? Mean it has a net current liability position. That means current liabilities are higher than current assets. A creditor, a creditor with US dollar 1 million demanded payment which the company could not pay because they have working capital issue. When you say your current ratio is below 1, that means your current liabilities are higher than current assets. So the creditor now is asking for the demanding for the payment, but the company cannot honor the payment. The creditor requested court to liquidate the business and recover his debt, and the court grants the order. So ක්‍රඩිට ඇවිල්ල ඉල්ලුව සල්ලි දැ මේගොල් කම්පැනියට දෙන්න බෑ ටස් ක්‍රඩිට ගිය උසාවියට ගිල්ල කියනවා ද මේ මගේ මේක ලික්විඩේට් කරලා මේ මට කියක් හරි ලැබෙන ගානක් දෙන්න අන්න කෝට් එක දෙනවා ඒකට ඕඩර එක දැන් මේකට පවුව සපෝට් කරන්නත් නෑ පේරන්ට් කම්පැනිය කියලත් නෑ හැම දෙනවා කියලා then the entity is no longer going concern which means they cannot prepare the financial statement on the basis the entity is a going concern. Number five, the entity exists making continuous losses over the years. That means just like Sri Lankan Airlines, making persistent losses. And as a result, its net assets are deteriorating with a net current liability position. Now, what are these things? Even so conditions which cause significant doubt about the entity's ability to continue as a going concern. The parent entity has provided, now there are even so condition which cause significant doubt about the entity's ability to continue as a going concern. But the parent company has provided a letter of support. Don't worry, බය වෙන්න එපා. අපි මේගොල්ලන්ට අවශ්‍ය ඔක්කොම සල්ලි දෙනවා ඊළඟ 12 months මේක operate කරන්න without curtailing any operations. අන්න guarantee එකක් දෙනවා නේ. The parent entity has provided a letter of financial support that it will render all necessary financial assistance for next 12 months to allow the entity X to continue in business without curtailing any of its major operations. Then the entity X is a going concern despite its poor financial performance and financial position. One thing you need to keep in mind, a going concern it doesn't mean that entity has to be profitable. There are many entities in the world and in Sri Lanka, they are making persistent losses, but still they they justify, despite these events or conditions, we are still a going concern, which mean use of going concern assumption is appropriate. Sometimes they have unused bank facilities. They say that we have bank facilities, we will use. Or they would say, our parent company has given us a letter of support. In the past, they have supported and they have in writing confirmed to us they are going to support. හරියට සාමාන්‍යයෙන් මේක රස්සාවක් නැති මිනිහෙක්ට කවුරු හරි තාත්තා හරි අම්මා හරි නැත්නම් සහෝදරයෙක් හරි සල්ලි භාගෙ දෙනවා නම් මිනිහට ඔය රස්සාවක් නැති වුණත් අල්ලන් යන්න පුළුවන්. අර ඒ වගේ තමයි දැන් there are organization they are not earning profit but still they can prepare the financial statement on a going concern basis, which mean management has to do a going concern assessment. I will explain that as we go along, which is a requirement of accounting standard, and they will say yes, there are even so conditions, but there are mitigating factors. There are mitigating factors. As a result, we are we we have concluded that the fine the going concern assumption is still appropriate. Now this is a real life example, which is this is actually Sri Lankan Airlines. I'm not going to go through all these details, but if you see, this is last year. Now there are events or conditions. What are the events? Group recorded a loss, an accumulated loss. Group current liabilities exceeded its current asset, which means net current liability position. And total equity of the group as a reporting date had declined to a negative. That means negative net worth, positive net. Then again the company. So Sri Lankan Airlines has its subsidiary, so the company. So then they explain. So they say that how their business affected, so you can read and understand. So let's get to the point. What are the mitigating factors? So when there are, as per LKS 1, management has to make an assessment whether the entity can operate as a going concern for foreseeable future. That is a requirement of the standard. So as far as Sri Lankan Airlines is concerned, they have noted even so conditions. Then they have the management has made an assessment of going concern to conclude whether they can still apply the going concern basis in preparing the financial statement. So when they do that assessment, they consider mitigating factors. So what are the mitigating factors? Now, this is from the annual report. The government of Sri Lanka continued to support the company and made policy decision at a cabinet meeting held on 13th March 2023 to restructure or divest its shareholding in the company, the state-owned enterprises, whatever. So it says, right, and it is expected that this result in interest saving of so much, all these things given, right? Further, the cabinet, the last part, further the cabinet by decision dated 10th July 23 has approved the appointment of IFC as the transaction advisor, right? The GOSL by the cabinet decision dated 28th of November 2022 approved the fleet replacement exercise for no more than 10 aircraft. So they explaining these are mitigating factors. So they are trying to justify based on their going assessment. Yes, we have even so condition, but still we feel that the use of going concern assumption is appropriate, not feeling they have concluded. Furthermore, the GOSL by way of a cabinet approval dated 5th June 2023 and the letter issued by the Secretary to the Treasury on 21st of September 2023 has confirmed that the GOSL will continue to extend the required financial support to the company to continue its operation as a going concern until the implementation of the proposed restructuring process is completed. Management believed that the significant improvement in the operating environment and measures taken as detailed above. So they have listed out. So when you have time, just please go through, right? Including the restructuring of debt will improve the company liquidity position in the future. Based on the above, the board of directors are of the view that the preparation and presentation of these financial statement as a going concern is appropriate. So you will see, as far as Sri Lankan Airlines is concerned, there are even so conditions which cause significant doubt about Sri Lankan Airlines' ability to continue as a going concern. As required under LKS 1, the management or the board of directors have made an assessment of going concern. They have identified certain strategic restructuring initiatives and other mitigating factors, primarily the letter of support granted by the government of Sri Lanka, and then the guarantees given to two state banks. And on that basis, Sri Lankan Airlines have, the board of directors have concluded that use of, despite the even so conditions which cause significant doubt about the entity's ability to continue as a going concern, the use of going concern assumption is still appropriate. That's why I said the entity is a going concern. Despite its poor financial performance and position, due to mitigating action as per the management assessment of entity's ability to continue as a going concern. So, have you all are you all clear with what I explained? So, let me just get to the uh, one moment. So, are you all clear with what I explained up to now? So the once we have the clear understanding about the going concern and the certain concept which we discuss, events or conditions, mitigating actions, management assessment of going concern. Are you all clear with what I explained? Right. So let me just go to the presentation, right? Responsibility for assessment of the entity's ability to continue as a going concern. That is surely not auditors, no. We are only doing an audit. Some financial reporting framework contain an explicit requirement for management to make a specific assessment of the entity's ability to continue as a going concern and standards regarding matters to be considered and disclosures to be made in connection with going concern. Now, in the Sri Lankan context, LKS1, which is in line with IAS1, requires management to make an assessment of an entity's ability to continue as a going concern. Now, you will appreciate that for a profit making entity like John Keel's, Haley's, or Dialogue, or another profit making company, this is a requirement of accounting standard. What is the requirement? As per the LKS1 or IAS1, management has to make a specific assessment of the entity's ability to continue as a going concern in preparing the general purpose financial statement. For a profitable company having net current assets, strong net asset base, strong growth in revenue, this could be a very straightforward exercise. But for an entity like Sri Lankan Airlines, or for that matter CEB, or Ceylon Petroleum, or some of the telco companies in Sri Lanka, or let's say certain other companies, it could be a detailed piece of work. Why? And in such entity, there are even so conditions that cause significant doubt about the entity's ability to continue as a going concern. Entity's ability to continue as a going concern. In that case, you have to do a detailed assessment of going concern by the management with mitigating factors and then to make their conclusion. And then as auditors also, if you do a company, an audit of a company, having even so condition that cause significant doubt about that particular entity ability to continue as a going concern, we also have detailed piece of work to do. We have to ask for management going concern assessment with the cash flows, and then sometimes request for letter of financial support. And once we get the letter of financial support, we have to do further audit procedure to see whether that party has the capacity to pay. There are some situations, the letter of support is issued by entity, that entity is also under life support, that entity also has losses. That is like basically blind is asking from blind, right? So you will see that for certain entities, this assessment is very straightforward, but for certain entities, detailed piece of work. So management assessment of the entity's ability to continue as a going concern involves making a judgment. So you are considering the foreseeable future, which is about 12 months from the date of the financial statement. At a particular point in time, about inherently uncertain future outcomes of events or conditions. So these are the factors, so I'm not going to go through. So this is the applicable accounting. LKS1 presentation of financial statement require that when preparing financial statement, management shall make an assessment of the entity's ability to continue as a going concern. An entity shall prepare a financial statement on a going concern basis unless management either intends to liquidate the entity or to cease the trading or has no realistic alternative but to do so. Who has no realistic alternative but to do so. The assessment should cover at least 12 months period from the end of the financial period. Right? When management is aware in making its assessment of material uncertainties, what are the material uncertainties that cause significant doubt related to events or conditions that may cause significant doubt upon the entity's ability to continue as a going concern, the entity shall disclose those uncertainties. Now, there is a disclosure requirement as per LKS 1. What is the now requirement? As per LKS 1, management has to make an assessment of going concern. As we discussed for certain entries, it's a very straightforward piece of work. But for certain entities like Sri Lankan Airlines, it's a detailed piece of work for management and it's a detailed piece of work for auditors as well. And then if there are material uncertainties related to the events or conditions that may cause significant doubt upon the entity's ability to continue as a going concern, the entity shall disclose those uncertainties. Now, that is what Sri Lankan Airlines accounts. Now, what I showed you, basically, now if you go to this is actually going concern note in the financial statement. When there are material uncertainties related to events or conditions that make a significant doubt about the entity's ability to continue as a going concern, the management should disclose those uncertainties, and if they are going to apply the going concern principle, so they are mitigating plans and they are to justify if they are going to use the going concern basis, right? So you will see as per the uh, LKS 1 or IAS 1, one is management is required to make an assessment of going concern, and then if there are material uncertainties relate to the events or condition that may cause significant doubt upon the entity's ability to continue as a going concern, the entity shall disclose those uncertainties. When an entity does not prepare its financial statement on a going concern basis, that means they have to prepare the financial statement on breakup basis. So liquidation basis of accounting, it shall disclose the fact together with the basis on which it prepared the financial statement and the reason why the entity is not regarded as a going concern. If that is when they prepare the financial statement not on a going concern basis, they have to disclose. So I will show you another one that sort of accounts it, right? This one. See, basis of accounting. Can you all see this one now? Can you all see my screen? The account set. This is actual account set, right? But it's the company Big Ben Tobacco Company. It's not a Sri Lankan one, right? Can you all see my screen? Yes or no? Can you all see my screen? Can somebody
Yes.
confirm?
Yes.
Right. See now, under accounting policies, those days we call significant accounting policies, now we call material accounting. The financial statements are prepared on non-going concern basis under the historical cost convention and in accordance with the company's set. In preparing these finances, the company applies the recognition, measurement, disclosure requirement of international accounting standard in conformity with the requirement of this set, whatever. So they are explaining why during 2014 and 15 operations were wound down and the Congo branch has been in the process of closing, all these things. So that's what basically you have to disclose. So that has to be disclosed. So that's what effectively it says. That's what it says. When an entity does not prepare its financial statement On a going concern basis, it shall disclose the fact together with the basis on which it prepared the financial statement and the reason why the entity is not regarded as a going. That's why they say, that Congo branch is was of closing down, all these things, right? Now, what are the objectives of this particular stand? Auditor's objectives. First one, to obtain sufficient appropriate audit evidence. So, what do you mean by sufficient appropriate audit evidence? Sufficient refers to the quantity. That means auditor has to obtain enough audit evidence. Appropriate means relevance and reliable. To obtain sufficient appropriate audit evidence regarding the appropriateness of management use of going concern assumption as required under what is the standard? LKS 1 or IAS 1 in the preparation of financial statement. So, as auditors, we need to get sufficient appropriate audit evidence, either use of going concern assumption or use another basis other than the going concern assumption is appropriate, and we have to get sufficient appropriate audit evidence. So that is the first one. To conclude, based on the audit evidence, whether material uncertainty exists related to events or conditions that may cause significant doubt on the entity's ability to continue as a going concern. So, in respect of Sri Lankan Airlines, the auditor is the Auditor General. Basically, the audit is done by another firm of chartered accountants, and they issue the report to the Auditor General, and Auditor General issue the report to the government. So that's the way how it works when it comes to state-owned enterprises. So there are reporting also in the auditor's report. So when we discuss the the reporting conclusion related to the going concern, we will discuss. So what is the first one? Obtain sufficient appropriate audit evidence. Then to conclude based on the audit evidence obtained, sufficient appropriate audit evidence obtained, whether a material uncertainty exists relate to events or conditions that may cause significant doubt on the entity's ability to continue as a going concern and report in accordance with this ISA. These are the three objectives. So then generally we follow, not generally, as per the auditing standard, we follow a risk-based audit approach. What do you mean by a risk-based audit approach? We perform risk assessment procedures and related activities and identify risk of material misstatement. We identify risk of material misstatement at two levels: at financial statement level, at accession level for classes of transaction, account balances and disclosures. I hope that you have done the 315, and when I was doing ISA 240 also, I explained this with examples, so I'm not going to explain it again. So under risk-based audit approach, the auditor is required to perform risk assessment procedures and related activities in order to identify risk of material misstatement at two levels: at financial statement level, at assertion level for classes of transaction, account balances and disclosure, and to design appropriate audit procedures. First is audit identify risk of material misstatement at two levels and design audit procedures which are responsive. Design audit procedures which are responsive to the assessed risk of material misstatement at financial statement level and at assertion level. What is the objective? To obtain sufficient appropriate audit evidence to conclude whether the balances are fairly stated. Financial statement provide a true and fair view. That's a risk-based audit approach. The same concept worked here. Now, what are the requirements? So we discussed the objectives and requirements when performing risk assessment procedures as required by ISA 315, which is identifying risk of material misstatement, and that standard was also revised. The auditor shall consider whether there are events or conditions. So that is actually risk. If there are uncertainties relate to events or conditions that may cause significant doubt on the entity's ability to continue as a going concern, auditor should consider that as a risk of material misstatement. That as a risk of material mistake. In doing so, the auditor shall determine whether management has already performed a preliminary assessment of entities' ability to continue as a going concern, because this is a requirement of LKS 1. One is the management has to make an assessment whether the entity is a going concern, and if so, whether they can apply going concern assumption in preparing the financial statement. And the other one is, what is the other one? So, when management is aware in making its assessment of material uncertainties related to events or condition that may cause significant doubt upon the entity's ability to continue as a going concern, the entity shall disclose those uncertainties. Those are requirement of the accounting standard. The risk assessment procedures required to help the auditor to determine whether management use of going concern basis of accounting is likely to be an important issue, whether it is to be treated as a significant risk and its impact on planning the audits. First, risk assessment. If there are uncertainty related to events or conditions that may cause significant doubt on the entity's ability to continue as a going concern, auditor has to consider whether it's going to be a risk or a significant risk, and then how we plan the required audit procedures in determining the audit strategy and audit plan. The auditor shall remain alert throughout the audit for audit evidence of events or conditions that may cause significant doubt on the entity's ability to continue as a going concern. Now we talk about events or conditions. Events or condition that may cause doubt about the entity's ability to continue as a going concern either individually or collectively. These are given in the ISA 570 standard. There are three: financial, operating, and other. Now, what is the net liability or net current liability position? Now, that is there in Sri Lankan Airlines. Fixed term borrowings approaching maturity without realistic prospect of renewal or repayment, or excessive reliance on short-term borrowings to finance long-term assets. Generally, long-term assets to be funded with the long-term, you have to match, because with long-term assets, you expect to realize the expected benefit over the useful life of those assets. Then your cash outflow, then you take the loan, you have to settle the loan. Then you have to match the benefits with the repayment of loans. Now, if the long term assets are funded through short term, then there is going to be a mismatch. There could be a working capital issue. Indicators of withdrawal of financial support by creditors. They say, no, we are not giving credit to you. From today, it's on cash basis. If you want, now can you remember about 2 years ago, Sri Lanka, even when there is a ship with oil, fuel basically, they don't release. They are just in the sea without unloading until they make the payment. Now they realize that Sri Lanka has declared bankruptcy. We had a significant foreign currency issue. So they didn't basically unload until they get the money. That's what is the indicators of that's a going concern. As a country, Sri Lanka had a going concern issue. Negative operating cash flows indicated by historical or prospective financial. Now, if you take a cash flow, you earn cash flows from three activities: operating activities, investing activities, and financing activities. Operating activities mean basically your profit or loss is adjusted with working capital changes to arrive at the basically cash profit. If it is a loss, then that means more than you get from your operations. Your outflows are higher than your inflows. So that's a simply negative operating cash flows mean. Adverse key financial ratios. I mean, I'm not going to go through the list. You can go read and understand, right? Then operating management intends to liquidate the entity or to cease operation. Loss of key management without replacement. Let's say we see Managing director has resigned, finance director has resigned, but there are no replacement, just the existing managers, they are running the business. Loss of major market, key customers, franchise, license or principal suppliers, labor difficulties, there are strikes, shortages of import supplies, emergence of highly successful competitor whose technology is far superior than ours. We are not in a position to match that. So we have no other choice to liquidate the entity, right? Then other non-compliance with capital law, other statutory requirements. As an example, the bank, there are the reserve requirements, minimum, the requirement to maintain. If they don't do that, their license will be either suspended or cancelled. Insurance also same. Then pending legal or regulatory proceedings against the entity that may, if successful, result in claim that the entity is unlikely to be able to satisfy. There is a court case. In case the court order is not in favor of the entity, if they have to pay a significant, claim, if that amount is not going to be within the financial capacity of the entity, then that will create uncertainties about even so conditions that may cause significant doubt about the entity's ability to continue as a going concern. Changes in law, regulation, or government policy expected to adversely affect the entity. Can you remember about some time back? So we actually had issues that asbestos sheet. So he said, like, the government decided that after some time, under Japan government, that they are going to suspend the import of asbestos sheet to the production. But that was taken out. I mean, if that is the case, if the government action is such that, then it will affect the continuity of the business. Then uninsured or underinsured catastrophes when they occur. Now, just you need to understand one thing based on our discussion up to now. Just because of you have even so condition, that doesn't mean that the entity is not a going concern. That is not the case. There could be uncertainties related to even so conditions that may cause significant doubt about the entity's ability to continue as a going concern. But as required under LKS 1, the management has to make an assessment of the entity's ability to continue as a going concern, and they could come up with a plan mitigating action, such as we are getting a letter of financial support, we have unused banking facilities, we are expecting to close down the part of our business and money, we have now developed a new product and we are expecting a significant growth in that area, we have now found a new customer and we have signed a term sheet, and our estimated sale from this new customer would be 150 million. Likewise, with mitigating factors, the auditor could the management could justify the use of going concern assumption is still appropriate despite these events or condition that may cause significant doubt about the entity's ability to continue as a going concern. Evaluating management assessment. The auditor has a responsibility to evaluate whether there is a substantial doubt about the entity's ability to continue as a going concern for a reasonable period. Now it's called foreseeable future. At least 1 year period, which means 12 months beyond the date of the financial statement being audited. Step in the going concern evaluation. Step 1. Consider if the results of audit procedures performed during the audit indicate whether there is substantial doubt about the entity's ability to continue as a going concern for a reasonable period of time. That means based on our risk assessment and related activities, whether there is a significant, substantial doubt about the entity's ability to continue as a going concern for a foreseeable future. Then, if there is a step 2, if there is a substantial doubt, the auditor should obtain information about management plans to mitigate the going concern problem that is required under LKS 1 and assess the likelihood that such plans can be realized or implemented, whether that plan is reasonable. If they come and say, just okay, we have done the manage our assessment. We are expecting 100% growth in our revenue. Let's say there is a telco company in Sri Lanka. They say that okay, we are currently making losses, but our expectation is to increase the subscriber base by 50%. In Sri Lanka, mobile penetration is more than our population. So if somebody say that our expectation is to increase our subscriber base to by 50%, I mean you have to eat into others' market share, because I mean it's already the mobile penetration is higher than the our country population. Then it's not reasonable. So that's why the auditor just cannot accept as it is the management assessment of going concern, but to see whether they can get sufficient appropriate audit evidence to establish that the management assessment is appropriate and reasonable. Then step three, if or the auditor conclude after evaluating the management plans, that is management assessment of going concern with mitigating factors, that the entity has a going concern problem, auditors should consider the implication to the auditor's report. So the reporting in the auditor's report. So that's the basically the step. So I'm not going to go through this slide. I mean, you can go through. The additional audit procedures when events or conditions are identified. Now, what are the events or conditions? You have financial, operational, or others. The auditor shall obtain sufficient appropriate audit evidence to determine whether or not a material uncertainty exists by performing additional audit procedures, including consideration of mitigating factors. If events or conditions have been identified that may cause significant doubt about the entity's ability to continue as a going concern, the auditor shall obtain sufficient appropriate audit evidence to determine whether material uncertainty exists. That means now Sri Lankan Airlines, there are events or conditions. Management has made an assessment of going concern, and auditor has referred to that, and then auditor has to consider even if the auditor conclude the use of going concern assumption is appropriate, whether a material uncertainty exists related to events or conditions that may cause significant doubt about the entity's ability to continue as a going concern. So, if your conclusion, yes, material answer, yes, use of going concern assumption is appropriate, but a material uncertainty exit, then there are implications to the auditor report. So, we will discuss as we go, including consideration of mitigating factors. Where management has not yet performed an assessment of the entity ability to continue as a going concern, requesting management to make its assessment. If they have not done that, it is a requirement of accounting standard. We have to ask them to do it. Then evaluating management plans for future action in relation to its going concern assessment, whether the outcome of this plan is likely to improve the situation and whether management plans are feasible in the circumstances. I mean, you can go through these things, right? Now, I discuss in the management assessment of going concern, you have to come up with mitigating factors. Factors mitigating the substantial doubt about the going concern. There are five here. Income factors. Auditor should consider mitigating factors. Now, where the mitigating factors come? In the management assessment of going concern, when there are events or conditions that may cause significant doubt about the entity's ability to continue as a going concern. First one is income factor. Plans to, I mean, for you to sustain as a going concern, the first one is income. So you are going to increase the revenue. Plans to expand sales in existing markets and introduce new products or services, and expansion into new markets. Those are management plans. Mitigating actions. Asset factors. Sale of assets or delayed replacement. Let's say we have some asset, we are going to sell and earn money and then continue as a going concern. Oh, we have to replace our machinery after every 10 years, but we are not going to do that. We are using with maintenance the existing ones. Debt factors. Unused lines of credit, unused bank facilities. Ability to renew or extend existing loans. Comfort letters from the shareholders. Cost factors, ability to reduce cost. Now, if you see Sri Lankan Airlines, under their restructuring, they are reducing, they are trying how we can rationalize the cost, introducing a VRS and taking out, excess staff, likewise, retrenchment, downsizing plans, likewise, equity factors. You ask the shareholders to fund through share capital. So income factors. Now, when you see a going concern assessment, either you will have income factors, asset factors, debt factors, cost factors, or equity factors. Combination of these factors. Additional contribution from owners, subsidiaries, or associate. Right. Then comfort letters, which we already discussed. There are two types of comfort letter. Letter of support. Parent or associate undertaking agrees to provide the financial assistance to subsidiary for fixed period. Now, in respect of Sri Lankan Airlines, government has agreed. Ministry of Finance. Letter of subordination. Parents agreed not to demand repayment of financial debt owned by the subsidiary. Now, we see that, okay, why they have a current liability position? There is a significant balance payable to a parent company or an associate or related party. They issue a letter, don't worry, we are not going to ask money until such time you are in a position to repay. You are in a position to repay. That is a comfort letter. What is the first category? Letter of support. Other one is letter of subordination. Don't worry, I am not going to ask from you money until such time you are in a position to repay. Other one is letter of support. Don't worry. For next 12 months, I hereby confirm that we will fund the entity as and when it is required to continue its operation for next 12 months from the date of these financial statement. That's a letter of support, right? Now, in the exam, you will be given a scenario, right? You will be given a scenario and ask first question would be identify events or conditions that may cause significant doubt about the entity's ability to continue as a going concern. Events or condition. Now, what are the events? There are three types of events: financial, operational, and other. You have to identify about four, and you get 4 marks. Easily, you can get that. If you go to Sri Lankan Airlines, let's go to. Now these are no, there are if this sort of a scenario is given in the exam, what is that? A loss situation, an accumulated loss, net current liability position, negative net worth, and then it will say that the company has lost one of the major customers. These are events or conditions that may cause significant doubt about the entity's ability to continue as a going concern. So that's the first question, right? In respect of this going concern standard will carry at least 12 marks, so you can easily get these 12 marks, right? But if you are not clear with any of the concept which I have explained up to now, please ask that, right? Otherwise at the exam you have nobody to ask, right? Now the first one is identifying events or condition. Then you will be asked to list or explain audit procedures to be performed in respect of to establish whether the entity is a going concern or not. Audit procedure the audit team could perform in assessing whether the entity is a going concern. Now this has all its. I mean, you don't want to. This is a is a your type. If you write four based on applicability, don't just චක්කරේ පාඩම් කරනවා වගේ මේකේ පළවෙනි පහ පාඩම් කරලා කියලා ලියන්න එපා. සමහර විට ඒ සිනාරියෝ එකට මේ පහ අදාළ නොවෙන්නත් පුළුවන්. right? නැත්නම් චක්කරේ පාඩම් කරනවා වගේ එක දිගට ඔක ලියාගෙන යයි. This is basically the audit procedure generally you would perform. Now let's say obtain the restructuring plan, if any approved by. If that case doesn't talk about a restructuring plan, if you cannot write that, you won't get mark. You have to understand the scenario and identify, okay, what is relevant. Now generally first one, obtain future years budget and cash flow forecast for next financially approved by the board of directors. Generally that is applicable in almost all the cases. Then assess the assumption for reasonableness and discuss finding with management. That is again. Let's say the letter says, the scenario says, management also, the parent company has agreed to issue a letter of support confirming that it would it will provide the financial assistance. Then what is our audit procedure? Obtain a copy of the letter of financial support and assess whether the confirming party has the financial capacity by obtaining the financial statement of the confirming party or independently confirming with the auditor of that particular entity. That is the procedure, right? So please read these things. Now review the post year end revenue and confirm, or let's say we are expecting to a 30% increase in revenue. So generally, let's say 31st December 2023 audit, you generally finalize March, April. They say that we are expecting 30% growth. So you would see how effectively they have achieved their budgets in the past. That is number one. Then you will see first couple of months, first 2 months or 3 months actual sales and the order book for next 3 months. And then you will assess whether they can actually get to 30%. These are the audit procedures you have to elaborate and then not to write but to type. Right? So that is required. So are you all clear? Now we are going to discuss the auditor conclusion. Auditor conclusion. Can you all confirm whether you all are okay with what I explained up to now? Are there any questions? Are there any questions? Up to now we are going to auditor reporting conclusion. So you should have understanding about the going concern assumption, the requirement of the accounting standard, and then the events or conditions that may cause significant doubt, and then the process, risk assessment and related activities, and then auditing the management assessment of going concern and mitigating factors, income factors, cost factors, asset factors, equity factors. Likewise, are there any questions or are you clear with what I have explained? So in the exam you will have to write about 4 to 5 events or condition, which is very easy, and then to write audit procedures you would perform to assess whether the entity is a going concern or not. You have to write about 4 to 5. That is more than enough. That will carry about 6 to 7 marks. Are there any queries? If you are clear, please let me know. Can can you all confirm? Yes. Right. Now, auditor conclusions. Now we have identified the risk, performed the audit procedures, and then now we have to see what are the implications to the auditor's report in respect of going concern. The auditor shall evaluate whether sufficient appropriate audit evidence has been obtained regarding and shall conclude on the appropriateness of management use of going concern basis of accounting in the preparation of the financial statement. That's a requirement, which we discussed earlier as well. Based on the audit evidence obtained, the auditor shall conclude whether in the auditor's judgment a material uncertainty exists. Now, what is a material uncertainty? A material uncertainty is the last paragraph. A material uncertainty is one relating to events or conditions that make a significant doubt on the entity's ability to continue as a going concern. And that may therefore indicate that it may be unable to realize its assets and discharge its liabilities in the normal course of business. But material uncertainty doesn't mean that it's not a going concern. Yes, despite the events or condition which may cause significant doubt on the entity's ability to continue as a going concern, auditor the management still may conclude that use of going concern assumption is still appropriate despite these events or conditions. That's what Sri Lankan Airlines has effectively done based on their going concern assessment. The auditors would accept that position. Yes, I am also accepting the use of going concern assumption is appropriate. There is no disagreement with the management, but auditor has to consider whether still there is a material uncertainty. What is the material uncertainty? Material uncertainty is one relating to events or condition that may cause significant doubt on the entity's ability to continue as a going concern. That may therefore indicate that it can the entity may be unable to realize its asset and discharge its liabilities in the ordinary course of business. The ordinary course of business. So the second paragraph, based on the audit evidence obtained, the auditor shall conclude whether in the auditor's judgment a material uncertainty exists relate to events or conditions that individually or collectively may cause significant doubt on the entity's ability to continue as a going concern. A material uncertainty exists when the magnitude of its potential impact, that likelihood of occurrence is such that the auditor judgment appropriate disclosure of the nature of implication of the uncertainty is necessary. It is not to, disagree with the management, but just if there is a material uncertainty or not, the auditor reporting will get impacted. Now, these are the different scenarios, right? Implication to the audit report. Use of going concern basis of accounting is inappropriate. Use of the based on the audit work performed, auditor has concluded use of going concern basis of accounting is inappropriate. But management has used going concern basis in preparing the financial statement. මොකද්ද පළවෙනි එක? Based on the audit work performed, auditor has concluded this entity cannot use the going concern basis, which means use of going concern basis of accounting is inappropriate. Now, the implication to the audit report, right? If the financial statements have been prepared using the going concern basis of accounting, but in the auditor's judgment, management use of going concern basis of accounting in the preparation of the financial statement is inappropriate, the auditor shall express an adverse opinion. Adverse opinion. Now, when you issue an adverse opinion, when financial statements are materially misstated and when auditor assess impact is both material and pervasive. In that situation, auditor issue an adverse opinion. So under the going concern, if the auditor concludes that use of going concern assumption is inappropriate, but contrary to that, management has used the going concern basis of accounting in preparing the financial statement, an adverse opinion to be issued regardless of whether or not the financial statement include disclosure of the inappropriateness of management use of going concern basis of accounting. That is the first one. I have a summary. I will share that after the today's work, right? Now, auditor has concluded use of going concern basis of accounting is inappropriate. The first one, adverse opinion, when management continue to prepare the financial statement on going concern basis. Now let's see if the financial statements are prepared on another basis, liquidation basis, breakup basis. Then auditor may be able to express an unmodified opinion. The මෙතන මොකක්ද කියන්නේ? Auditor කියනවා use of going concern basis is inappropriate. Management උත් කියනවා ඔව් inappropriate අපි accounts හදන්නේ නැහැ. Going concern basis අපි හදන්නේ breakup basis. ඉතින් ප්‍රශ්නයක් නැහැනේ. ප්‍රශ්නයක් නැහැනේ. Auditor කියනවා ඉඳගෙන ඔයගොල්ලන්ට going concern basis එක නම් use කරන්න බෑ. Client කියනවා අපි ඒක පිළිගන්නවා. අපි accounts හදන්නේ නැහැ. ඉතින් ප්‍රශ්නයක් නැහැ. අනේ වගේ වෙලාවක unmodified opinion එකක් දෙන්න පුළුවන්. මොකද unmodified කියන්නේ unqualified opinion clean report. Financial statements have been prepared in accordance with the applicable financial reporting framework. In other words, financial statement provide a true and fair view. The method disagreement and nanny. What it at use of going concern basis of accounting is inappropriate. Management would yes, it is inappropriate, and that's why we are using another basis, liquidation basis, or you call it breakup basis. That's what it says. If the financial statements are prepared on another basis, then the auditor may be able to express an opinion, uh, may be able to express an unmodified opinion on those financial statement, provide there is adequate disclosure therein about the basis of accounting on which the financial statements are prepared. That is what I showed you all. This one, Big Ben. Now that is what. Now these people, they don't basically prepare accounts on going concern basis, though they explain why we are not preparing financial statement on a going concern basis. Now then it goes to say, but auditor may consider to include an emphasis of matter paragraph in accordance 706. Now the question is, what is an emphasis of matter paragraph? What is an emphasis of matter paragraph? Now, what is an emphasis of matter paragraph? A matter that is appropriately disclosed so presented in the financial statement, a matter that is appropriately presented or disclosed in the financial statement, but auditor consider it is of such importance to understand the financial statement. No, in other words, it is fundamental to understand the financial statement. Auditor can include an emphasis of matter. Emphasize karno. What do you mean by emphasis of matter? Auditor state, in other words, I have emphasized note number. Let's say we'll go to that one. No? I have emphasized note number 1, which explained the basis of accounting. You better read it. Now, what is an emphasis of matter paragraph? A matter that is appropriately disclosed and presented in the financial statement, but based on the auditor's judgment, it is of so important. It is so important or fundamental to understand the financial statement. Then අපි යම් මේකේ audit report එකට මේ බලන්න. We'll see. Emphasis of matter paragraph. Not going concern basis of preparation. We draw attention to the disclosure made in note 1 to the financial statement, which explain that the financial statements are now not being prepared on the going concern basis for the reason set out in that note. Our opinion is not modified in respect, because emphasis of matter, what is the, in simple terms, I emphasize note number 1, you better read it. Auditor is stating that to the users. So I hope you are clear. What is an emphasis of matter paragraph? A matter that is appropriately disclosed and presented in the financial statement. Now, අපි අර account set එකේ note number 1 එකේ කිසිම ප්‍රශ්නයක් නැහැ. ඒක ෂෝක් එකකට explain කරලා තියෙනවා. ඇයි ඒගොල්ලෝ going concern හදන්නේ නැත්තේ? But auditor has concluded that it is so important. It is fundamental to the user's understanding of the financial statement, and hence include an emphasis of matter paragraph to emphasize that for users to read that note. So I hope you are clear with this one, right? This is use of going concern basis of accounting is inappropriate. In the first scenario, still management prepare the accounts on going concern basis in that situation and adverse opinion. If auditor conclude that the going concern basis of accounting is inappropriate, and management also conclude the same, unmodified opinion, but an emphasis of matter paragraph, right? Now the first one, the other one. Adequacy of disclosures when events or conditions have been identified, but use of going concern assumption is appropriate. See, if the auditor conclude that management use of going concern basis of accounting is appropriate in the circumstances, that means despite having events or conditions, despite having events or conditions, based on the management assessment of going concern, which conclude that the use of going concern assumption is appropriate, auditor also consider use of going concern assumption is appropriate. But if auditor conclude, yes, I agree with your conclusion, use of going concern assumption basis is appropriate, but a material uncertainty exit, the auditor shall determine whether the financial statement. Can you remember earlier we discussed if there is a material uncertainty with regard to going concern, as per case 1, you have to have disclosure. That's why effectively Sri Lankan Airlines you have a detailed going concern note, but may not be the case in John Keels. Very straightforward. So, what is the situation? Events and conditions have been identified, and management has performed an assessment of going concern, and they have concluded that despite these events or conditions, based on management assessment of going concern, use of going concern assumption is appropriate, and auditor also concur with that determination. But auditor conclude that material uncertainty exist. In that case, as per accounting standard, there should be appropriate disclosures about material uncertainty related to events or condition. Then that's what is the auditor shall determine whether the financial statement adequately disclose the financial principal events or condition that may cause significant doubt on the entity's ability to continue as a going concern, and management plans to deal with these events or condition. If you see the Sri Lankan Airlines going concern note, effectively that provide that. Then in the auditor's report, disclose clearly that there is a material uncertainty related to events or condition that may cause significant doubt on the entity's ability to continue as a. So in the going concern note, audit has, I mean, the management has disclosed clearly that there is a material uncertainty related to events or condition that may cause significant doubt on the entity's ability to continue as a going concern, and therefore that it may be unable to realize its asset and discharge its liabilities in the ordinary course of business. So, what is our sequence of events? Events or conditions have been identified that cause significant doubt about the entity's ability to continue as a going concern, and management has prepared an assessment of going concern with mitigating actions, and justified that use of going concern assumption is appropriate, and auditor also concludes the same, but auditor has concluded that material uncertainty exist. In that case, these two disclosures should be in the financial statement. Now, how it is impact? Use of going concern basis of accounting is appropriate, but material uncertainty exceed. Adequate disclosure. What do you mean by adequate disclosures? These two, A and B. First one is adequate disclosure of material uncertainty is made in the financial statement. How it is affecting? If adequate disclosures about the material uncertainty is made in the financial statement, the auditor shall express an unmodified opinion, and the auditor report shall include a separate section under the heading Material Uncertainty related to going concern. If there is a question in the exam, I will show you the question now. So let me go to the questions. Then you will see how the exam questions would play. See, explain the implication to the independent auditor's report. When the auditor conclude that the use of going concern assumption is appropriate in the circumstances, but a material uncertainty exit, an adequate disclosure is made in the uh, in the financial statement regarding the material uncertainty. What is the question? Explain the implication to the independent auditor's report when the auditor concludes that use of going concern assumption is appropriate in the circumstances, but a material uncertainty exists and adequate disclosure is made regarding the material uncertainty in the financial statement. So, what has to be done? So, we are going to that. This is what is your answer? If adequate disclosure about the material uncertainty is made in the financial statement, the auditor shall express an unmodified opinion, and the auditor's report shall include a separate section under the heading Material Uncertainty related to going concern. What is the objective of this paragraph? This section to draw use attention to the note on in the financial statement that disclose the relevant factors is similar to emphasis of matter. Earlier, actually, we call this as emphasis of matter, but now under the revised standard, the heading should be material uncertainty related to going concern. That you have to write in the exam, right? What is the objective? You issue an unmodified opinion, but you are giving a separate paragraph. I will show the paragraph in the next slide. What is the name of the paragraph? Material uncertainty related to going concern. Can you all hear me? Can somebody speak and say whether you all can hear me or not?
Can hear.
I'm just right. So, what is the objective of this paragraph? First one, to draw attention of the users to the note in the financial statement that discloses the relevant matters. Now, Sri Lankan, I will go to them. So, what is the second one? State that these events or conditions indicate that a material uncertainty exists that may cause significant doubt on the entity's ability to continue as a going concern, and that the audit opinion is not modified in respect of this matter. Now, this if this question comes, it will carry 6 marks. Easily you can get. Now, this is a model. I'm not asking you all at the exam to draft the sections and all that, but only this part, right? Only this part. Now, this is the report opinion, basis for opinion. This is that note. When you are giving this, so you have issue unmodified opinion. In our opinion, the company in financial statement present fairly in all material respect the financial position of the company, whatever, all that. This is called unmodified, unqualified or clean report. Now, material uncertainty related to going concern separate. This is when use of going concern assumption is appropriate and adequate disclosures are made in the financial statement, but auditor has concluded that there is a material uncertainty with regard to entity's ability to continue as a going concern. Now, what is the purpose? There are two purposes. Draw attention to the note, and then the state these events or condition indicate that a material uncertainty exists that may cause significant doubt on the entity's ability to continue as a going concern, and that auditor's opinion is not modified in respect of the matter. See, we draw attention to note 6 in the financial statement, which indicate that the company incurred a net loss of so much during the year ended 31 December 2016. And as of that date, the company's current liability exceeded whatever. What are these? These are events or conditions. Now, it's what it says. State that these events or conditions. Now, what are these? Loss, net current liability, all that net liability, those are events. As stated in Note 6. Now, what is this Note 6? Going concern? No. These events or condition, along with other matters set forth in Note 6, indicate that material uncertainty exists that may cause significant doubt on the company's ability to continue as a going concern. Our opinion is not modified in respect, because this paragraph is not a modification. That's why you issue unmodified opinion. That's what it state that these events or condition indicate that material uncertainty exists. You show that in that paragraph. That may cause significant doubt on the entity's ability to continue as a going concern, and the auditor's opinion is not modified. Clear? So I'm now going to Sri Lankan Airlines audit report. You will see. Now, this Sri Lankan Airlines, no. If you go to audit report, they have identified this is emphasis on matter. The first one is what? Material uncertainty related to going concern. So effectively what they explain. The same thing, no? Even so with the even so conditions, likewise. Then they say the existence of such events or condition along with other matters as set forth in note 2.1, that is what? Going concern, indicate that a material uncertainty exit that may cause significant doubt on the entity's ability to continue as a going concern. Then what if there was one no, our opinion is not modified, so they have another emphasis on matter. My opinion is not modified. Why you call my opinion is the opinion is issued by the Auditor General in respect of these matters. So I hope you are clear with that as well. So that is what effectively our opinion is not modified. This is when adequate there are events or conditions based on management assessment of going concern, use of going concern assumption is appropriate, and auditor also concludes the same. But there is a material uncertainty, and then when there is a material uncertainty, as per L case 1, the disclosures are to be made, and they have made those disclosures. Unmodified opinion, a separate paragraph. Now we go to this. Use of going concern basis of accounting is appropriate, but a material uncertainty exists. First situation, similar to first situation, but now here the problem is adequate. Earlier one, what happened? Adequate disclosures are made in the financial statement. Then what we do? Unmodified opinion and separate paragraph term material uncertainty related to going concern. Now here what is the difference? Use of going concern assumption is appropriate, but a material uncertainty exit. The problem is adequate disclosure of material uncertainty is not made in the financial statement. Now there are two situations. If the disclosure in the financial statement, there are some disclosures, but auditor conclude that it's inadequate. In that case, a qualified opinion. If disclosure omit the required disclosure or critical disclosures, then adverse opinion. Then adverse opinion. Let me once again explain. In the first scenario, use of going concern assumption is appropriate, but a material uncertainty exists. An auditor also concludes concur with the management view, and management has given the required disclosures as per the accounting standard about the material uncertainty. In that case, unmodified opinion with a separate paragraph termed as material uncertainty related to going concern. And the purpose of giving this paragraph is disclosed in A and B. Now we are coming here. Same conclusion. Use of going concern basis of accounting is appropriate, but a material uncertainty exists. The issue is adequate disclosure of the material uncertainty is not made in the financial statement by the management. There are two situations here. If the adequate consider disclosures considered to be inadequate, that means disclosures තියනවා හැබැයි ඔක්කොම ටික නැහැ. එතකොට අපි කියන්නේ impact is material but not pervasive. Impact is material but not pervasive. එතකොට අපි දෙන්නේ මොකක්ද? මතකද focus two circumstances. Two circumstances modified four opinions. පළවෙනි එක financial statements are materially misstated. If the impact is material but not pervasive, qualified opinion. Material and pervasive adverse opinion. Limitation of scope, possible effect is material but not pervasive, qualified opinion. Possible effect of limitation scope, both could be material and could be both material and pervasive, a disclaimer of opinion. Now here also same concept. If disclosures are inadequate, qualified opinion, that means The effect is material but not pervasive. An adverse opinion where the disclosures omit critical disclosures. That means the effect is both material and pervasive, and hence adverse opinion. We'll read out. As required by ISA 570, going concern when the auditor has obtained sufficient appropriate audit evidence regarding the appropriateness of the management use of going concern basis of accounting, but adequate disclosure of material uncertainty is not made in the financial statement, the auditor has to assess whether the effect on the financial statement of inadequate disclosures are likely to be material but unlikely to be having a pervasive effect on the financial statement. In that case, qualified opinion, or it will likely to have both material and pervasive effect on the financial statement. In that case, adverse opinion. Are you all clear with whatever I explained up to now? Are you all clear with what I explained up to now? Can somebody tell me? So we discussed few scenarios. What is the first one? Okay, right? Then, so you have to just the same thing, right? Same thing you have to. I mean, you can read. The key part is this part. This is the example. Qualified opinion. What is this? Auditor reporting when the auditor conclude that the material uncertainty exceed disclose the inadequate. Inadequate na මොකක්ද දෙන්නේ? Qualified opinion. Anything qualified. Except for opinion. In our opinion, except for the incomplete disclosure of the information referred to in the basis for qualified section of our audit report. That is called except for opinion, qualified mean. So that's what is except for. एक error, the company financial statement present fairly in all material respect. This is the basis of qualified opinion. As discussed in Note YY, the company financing arrangement expire and amounts outstanding are payable on 31 December 2016. The company has been unable to conclude renegotiation or obtain replacement financing. This situation indicates that material uncertainty exit that may cause significant doubt of the company's ability to continue as a going concern. The financial statement do not adequately disclose this matter. So this is a qualified opinion. The disclosures are there but inadequate. That means if the auditor has concluded that effect is material but not pervasive. Let's go to the other one. Auditor reporting when auditor concluded that material uncertainty exceed disclosure in the financial statement omit the required disclosure relating to material uncertainty. That means auditor has concluded that effect is material, the effect is both material and pervasive. Adverse opinion. Now, adverse opinion is the right opposite of unmodified opinion. So, I will show you all. Now, if you see what is the uh, this one, in our opinion, see, in our opinion, because of the omission of the information mentioned in basis of adverse opinion section. The earlier one, what? Basis for qualified opinion. Now this is basis for adverse opinion. The accompanying financial statement do not present fairly or do not give a true and fair view. If you take out do not word, that is the unmodified opinion. If you take out do not from this sentence, if you say in our opinion the accompanying financial statement present fairly or give a true and fair view, that is unmodified opinion. Now, adverse opinion is the right opposite of unmodified opinion. This is issued when auditor conclude that the use of going concern assumption is material, but material uncertainty exceed. But disclosure in the financial statement omit the required disclosure of critical disclosure, and auditor has assessed the effect is both material and pervasive. In that case, adverse opinion, right? Let's go to the questions. Explain the implication to the independent auditor's report when the auditor conclude that the use of going concern assumption is appropriate in the circumstance, but material uncertainty exist and adequate disclosure is not made regarding the material uncertainty in the financial statement. So, what is your answer? This one. This is your answer. This is the answer. You have to say if it is inadequate, which means effect is considered to be material but not pervasive. Qualified opinion. If auditor conclude that effect is both material and pervasive, adverse opinion. You get about 6 to 7 marks. I hope that is also clear with you. This is that one, right? Adequate disclosure of material uncertainty is not made in the auditor reporting when auditor conclude that the material uncertainty exist and disclose in the financial statement omit the required disclosure relating to when the auditor can express the qualified adverse, the requirement to communicate can still apply and all these things. I mean, those are you can read and understand. Then next one, adequacy of disclosure when events or conditions have been identified but no material uncertainty exist. If events or conditions have been, this is called close call, right? This situation is called close call. That means events or conditions have been identified and management has performed an assessment of going concern and they conclude that use of going concern assumption is appropriate and they have also concluded there is no material uncertainty and auditor also has concluded that there is no material uncertainty. This situation could happen to an entity, let's say new entity. First 2 years generally the entities are making losses in the introductory stage. Then after three, the after 1 or 2 years time, they are getting the customers, and then the say the plant capacity, all that, and they have a confirmed income. In rare circumstances, the auditor would conclude basically when there are events or conditions, and use when auditor conclude that use of going concern assumption is appropriate. Generally, the situation is auditor conclude that there is a material uncertainty. But there are situations auditor conclude that no material uncertainty. As an example, solid letter of support has been given by the parent company. It has capacity to pay, and it has been the practice for the parent company to support the entity financially based on the past records. Then auditor may conclude that yes, there are events or conditions, and based on the management assessment and mitigating actions, they have considered they have got a letter of support and very strong financial support. Parent has the financial capacity. This is similar to John Keel's holding issue a letter of support to a small entity within the group, and there is no material uncertainty because I mean they can run the business. So in that this sort of a situation we call close call. If events or conditions have been identified that may cause significant doubt on the entity's ability to continue as a going concern, but based on the audit evidence obtained, the auditor conclude that no material uncertainty exists, the auditor shall evaluate in view of the requirement of the applicable financial reporting framework. The financial statement provide adequate disclosure about these events or conditions. The disclosures are to be there. The difference is what? In this situation, auditor has concluded that no material uncertainty. In the previous scenarios, the auditor has concluded that there is a material uncertainty, right? This close call can be disclosed in line with ISA 701. What is ISA 701? Key audit matters. If this entity is a listed entity, I go back to the first slide. That's what it says. Deals with order and communicate. ISA 701 Communicating key audit matters in the independent auditor's reports deals with the auditor's responsibility to communicate key audit matters in the auditor's report. ISA 701 acknowledge that when ISA 701 applies, ISA 701 applies to listed entities. Matters relating to going concern may be determined to be key audit matters and explain that a material uncertainty related to events or conditions that may cause significant doubt on the entity's ability to continue as a going concern. It is by its nature a key audit matter. So let's go to the place where we were. That's as it says. This close call can be disclosed in line with ISA 701 if this entity is a listed. This is because while the auditor may conclude that no material uncertainty exists, they may determine that one or more matters relating to this conclusion are key audit matters. Example, so I'm not going to discuss the key audit matters, what is the thought process, and what are key audit matters, right? I'm sure you would have covered that standard. Example includes substantial operating losses, available borrowing facilities, possible debt refinancing, or non-compliance with loan covenants or agreement, and related mitigating factors. In summary, if a confirmed material uncertainty exists, it must be disclosed in accordance with 570. When there is a close call, that means when there is no material uncertainty over going concern, we are not reporting under ISA 570. We are reporting under ISA 570 when there is a material uncertainty exit. Then under ISA 570 we report. That's what we discuss up to now. When there is no material uncertainty, if it is going to be a CAM, if it is a listed entity, it has to be disclosed under ISA 701. That's what it says. In summary, if a confirmed material uncertainty exit, it must be disclosed in accordance with ISA 570. And where there is a close call. What do you mean by close call? No material uncertainty exist with regard to events or conditions that cause significant doubt about the entity's ability to continue as a going concern. That's what called close call. Overgoing concern, which has been determined by the auditor to be a CAM if it is a listed entity, it will be disclosed as a CAM in line with the requirement of ISA 701, which is the brand new standard introduced with the revisions to the auditor reporting standard. ISA 701, reporting key audit matters in the independent auditor's report. So this is, management unwilling to make. That means as per LKS 1, it is a responsibility of the management to make a going concern assessment. That is a requirement. And it should cover 12 months. What is the scenario? Management unwilling to make or extend its assessment. If management is unwilling to make, that means they don't like to do an assessment. Then what? Or extend its assessment when is requested to do so by the auditor. The auditor shall consider the implication to the auditor's report. In certain circumstances, auditor may believe it is necessary to request to make or extend its assessment. If management is unwilling to do so, qualified opinion or disclaimer of opinion. Because the disclaimer of opinion issued when there is a limitation of scope. Now, auditor asks, we need your assessment of going concern. They say we cannot provide. Say they have done it for, let's say, 8 months. Auditor asks, you have to do it for 12 months. They say we cannot do it for 12 months. If auditor assess the possible effect of this is likely to be material but unlikely to be pervasive, then a qualified opinion. If auditor assess this limitation of scope, because there is a scope limitation, the auditor is unable to perform the audit procedures to obtain sufficient appropriate audit evidence. To obtain sufficient appropriate audit evidence. This is called limitation of scope. Audit assess the possible effect of this limitation of scope could be both material and pervasive, then a disclaimer of opinion. What is a disclaimer of opinion? Auditor is not expressing an opinion. If auditor assess the possible effect could be material but unlikely to be having a pervasive effect, then a qualified opinion. A qualified opinion. Now, these are the questions. The first two we already discussed. Explain the implication to the independent auditor's report. Third one, right? When the auditor conclude that the use of going concern assumption is inappropriate in the circumstances, but management continue to apply the going concern basis in preparing the financial statement. What is the very first one we discuss? This one. Use of going concern basis of accounting is inappropriate, but management continue to use the going concern basis and adverse opinion. If the exam question says that auditor has concluded that the management use of going concern basis is inappropriate, and auditor management also has concluded same and adequate disclosures are provided, what are the implications to the audit report? Then this answer. If the financial statements are prepared on another basis, that is called breakup basis or liquidation basis, then the auditor may be able to express an unmodified opinion on those financial statements, provided there is adequate disclosure therein about the basis of accounting on which the financial statements are prepared, but may consider to include an emphasis on matter paragraph in accordance with ISA 706, which is what I showed you. Emphasis on matter paragraph and basis of preparation, right? So let's go to the questions. Describe key audit procedures the audit team should perform in assessing whether the entities are going concern or not. These are the answers. Sorry. These are the answers. There are two pages. We have to write 4 5 what is applicable, right? අර චක්‍රේ පාඩම් කරනවා වගේ මුල් පාඩ ලියලා පාඩම් කරලා ගිහලා නැත්නම් අන්තිම පාඩම් කරලා ලියනවා. You have to relate to the case, right? Then that is. Then what is the other question? List 5 potential indicators. Now Sri Lankan Airlines, what are the potential indicators? We go to the going concern note. Sorry. Where is okay? I have the going concern note too in my presentation itself. This is the going concern. These are the indicators, no? Events or conditions. Net loss, net current liabilities, negative net worth, serious loss of capital situation, loss of key customers, creditors are not providing credit but on cash basis. So likewise, right? So I am now going to the, so I hope you are clear. I am going to this, see, now this is the summary. I will share this with Natasha who can upload this. Now first one, events or condition identified. No. Example, John Keels, Haley's, dialogue, or likewise, right? Events or conditions identified. Just this is we are summarizing here, right? Yes, events or condition identified which cause significant doubt about the entity's ability to continue as a going concern. Answer is yes. Use of going concern basis is appropriate. No. That means auditor conclude that whether the financial statement could be prepared using the going concern basis. That means whether the use of going concern basis is appropriate. If the answer is no, then the next question is, have the financial statement been prepared on the basis of a going concern? No. This is get related to what? This position, this one, no, this one. The finances use of going concern assumption inappropriate, and management is also not preparing, right? You have to relate this to this, right? No, prepared on an alternative basis, liquidation basis, so breakup basis. Unmodified opinion, emphasis of matter paragraph. Then the other scenario. Question is, have the use of going concern basis is appropriate? No, that means inappropriate. Have the financial statement been prepared on the basis of going concern? Yes. And there is a disagreement. Adverse opinion. Adverse opinion. Can you remember? This one. Adverse opinion, right? I'm just explaining that also again. Now, use of going concern assumption is appropriate. Yes, very good. The question is material uncertainty exit. Yes, yes. Then, as per Sri Lanka accounting standard, what is this? Events or conditions identify, use of going concern basis is appropriate. Yes. Whether material uncertainty exit or not, yes. What is the first one? Financial disclosure of events or conditions and management plans to deal with conditions. Yes. Then what is unmodified opinion? Audit report to include the separate section termed that material uncertainty related to going concern. This is the situation of Sri Lankan Airlines. So I will go to that presentation once again. See this adequate disclosure when the events or conditions have been identified. If the auditor concludes that management use of going concern basis of accounting is appropriate in the circumstance, but a material uncertainty exit, the auditor shall determine whether the financial statement adequately disclose. If it is the case, okay, first one, adequate disclosure of material uncertainty is made in the financial statement. What is that? Unmodified opinion and separate section called material uncertainty. The purpose is disclosed under A and B. This is that, right? Yes. Even so, condition identify yes. Use of going concern basis is appropriate yes. Material uncertainty exit yes. Then the next question is finances statement disclose events or condition and management plans to deal with condition. Yes, Sri Lankan Airlines. Then the no. Now when you go, that means the disclosures are not made in the finances statement. So we discuss two things. We discuss two things. Disclosures in the financial statement inadequate. Disclosure නැතුව නෙමෙයි තියනවා නමුත් inadequate. එතකොට අපි කිව්වේ the effect is material but not pervasive. Qualified opinion. What is the other one? Disclosures omit critical information. That means effect is material and pervasive. Then adverse opinion. So let's go to that particular position. Please. This one. This one. Adequate disclosure of material uncertainty is not made. Earlier, what? Adequate disclosure of material uncertainty is made in the financial statement. Then, a qualified opinion if the disclosure is inadequate, which means the effect is likely to be material but unlikely to be pervasive, having a pervasive effect. Qualified opinion. If auditor conclude that the disclosures omit critical disclosures and the effect is both material and pervasive and adverse opinion, then we are going to close call. Events or conditions identify yes. Use of going concern basis is appropriate yes. Material uncertainty exit no, which is called close call. Unmodified opinion, this situation is called as close call and may be disclosed as a CAM if it is a listed entity because generally matters related to going concern are considered to be key audit matters. Financial statement may nevertheless include disclosures. ඒක තියෙනවා. So this is at high level auditor reporting, basically conclusion summary. I will share this slide, and these questions which we discuss are very very important for your exams. You need to read. I don't know how many uh, uh, are there. So right. So I don't think we have time to do the balance part because now we have taken almost 2.5 hours for this session. Are there any questions? I mean, you don't want to ask. If you, I mean, if you want to ask, please you can ask. In respect of going concern, this will carry at least 12 to 13 marks in your exam, and you can easily get marks. This 13 marks, right? Uh, do you have any questions? Either you can ask or send a chat message. I will answer. So we discuss so far. So that's all actually the session for the going concern. I'm not going to do the balance part of ISA 220. I will talk to Natasha and agree on the date because we have half of 220 and then 540, which is again important standard like going concern. 550, of course, when you can read and understand, so I can able to discuss the potential questions, explaining the critical one. Are there any questions? With the time now 8:58. No, so these are all comments. So are there any questions? Either you can ask. So only thing is we have very low participation. I mean, if people, the other students can listen to the recording and understand, but I don't know, for 2.5 hours it's difficult for somebody to listen to that. But I mean, they probably they are comfortable. That's why they are not attended. So those who are in the on the call, there are 15 students. Are there any other questions before we wind up for today? And I'll talk to Natasha and then agree on the next date for the lecture. Probably we will have either next Saturday or Sunday, depending on your availability, not my availability, but based on the time you all can basically do. Are there any questions? If not, basically, I'll give just a couple of seconds, 1 second, just to 1 minute for you all to raise in the chat message. If not, basically, we can basically conclude. So that means there are no questions. So thank you very much. Good night. So we will see either Saturday or Sunday, right?